I'm really going heavy on Nvidia because I think long term, over 3, 4, 5 years, we're going to see all of these three stocks start to recover greatly. We may go through some down times. We may drop some more. We don't know what's going to happen this year. We could literally go into a recession this year, which will draw all of those stocks will draw down maybe 30, 40% from here. But we can still DCA or dollar cost average in as we go down. Now, a lot of you are saying, what is DCA? Most of you know that have been following me because we talk about that a lot on the Crypto Trends podcast, on all of my other things I do. DCA is what's called dollar cost average. And what that means is that instead of looking at a stock, and let's say you got $10,000 you want to put into it. Let's say you got $1,000 you want to put into a stock. And you say, well, I could put it all in right now. Well, a lot of people say, well, if you buy it now and it drops, then what's going to happen? Well, the strategy for dollar cost average is that you put a little bit in over time, maybe over 10 days. So what you do is you say, I look at Nvidia. Nvidia's at $100 right now. I got $1,000. So I'm going to buy one share today. Then the next day comes. Maybe Nvidia drops. You say, I'm going to buy another share. I'm going to buy one share a day until my money is depleted. So it takes you 10 days to do it. Now, during those 10 days, Nvidia may go up, down, 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 up, down. So what you're doing is you're creating an average price over a time period. In a time of decline, you're getting a very low price among that decline. That's called dollar cost average. And if you do that, you normally will get a better price for that stock than going all in at once, because you've taken advantage over several days of volatility or several years or whatever your time period is. Another way to do dollar cost average is that you could say, I'm only going to buy Nvidia on down days for the next month. So every time Nvidia is down, at the end of the day, before market close, I'm going to buy one. So what you do there, if you stretch it out for 30 days, is that you're buying on each down period. So you're creating a lower dollar cost average than you would just on regular dollar cost averaging in. In a down market, that works extraordinarily well. You say, well, when Nvidia falls that day, or another stock or crypto, I'm going to buy some. And that really creates a lower dollar cost average than you would get just by doing it per time period, like every day. So there's two methods you can do that. And then once it starts to recover, you've had a lower price per share, and you make a lot more money on the way up. Those are two ways you can do that. And those two ways decrease stress. It decreases, and you can do this with crypto too. You could buy an Ethereum or half of Ethereum, $100 Ethereum every time period, or every time it drops. It creates a low stress way to get into stocks or crypto. It creates a way that you're buying small amounts. You have a long-term strategy out, and you're not as stressful. You're not as unsure. You don't know, because you're doing it over time. It's a lot easier to enter a stock or a crypto asset like that than it is just to pick a time and go all in.